All right, ladies and gentlemen, I hope you had a wonderful day. I had to get in front of this screen because you remember this setting? I've done this before. I did this last time or the first time that Snapchat had bad earnings and I gave a warning for tech stocks. That's why I'm doing it again, because Google came out after the bell, ladies and gentlemen, and there is some warning signs. So I think there's going to be a little bit of volatility and there will be a little back and forth on this issue because it wasn't totally awful, but the Google earnings after the bell, it is showing a crack in ad spend and this may not be good. So we're going to wait till the futures open up. We're going to see how it is. It's already been a crazy week, but if the market responds negatively to Google tomorrow, that is a warning for all of the tech stocks. And this is putting anybody who hasn't reported on notice. But the earnings have been good so far. So we got a lot to talk about. I'm going to go sit down and get ready and all. I'm just trying to remind you. I'm trying to put you in. You know what I'm saying? Okay, so hold on. Give me a sec. Okay, I'm seated now. But ladies and gentlemen, it's very, very simple. If we see a crack in ad spending, if it's showing up in Google now, this is pretty much saying everything that Snapchat was warning about. We are now starting to watch it spread, but doesn't mean we're going down just yet, ladies and gentlemen. So today was a wild one. I got the breakdown. I got the keys and all of that. I have a very simple explanation for what went down today, but the name of the game right now is earnings. And this is why Google is so important, because now even Microsoft today, they came in line, but their guidance was lowered and they missed on some areas or came in line where it wasn't good. But the whole point is, up until this moment after the bell, all of what you've seen with the market, that is because we have had very good earnings. Even this morning, GM, they came out good. There was like a couple of other ones, even UPS, and I think another. And oh man, it's all right. Hold on. Yeah, bro, Microsoft on the low ticker, they just came out. I think it's this news right here. They expect second quarter currency to cut sales growth by 5%. If that's additional to what they already reported, that's not good. But again, the futures have not opened yet, so get ready for that. But like I was telling you, the earnings have been good. And now Microsoft, Google, this is going to cast some doubt. So even though I'm saying this is really, really bad on Google's part, what I want you to keep an eye out for is how the rest of the companies perform, because that will still dictate a lot of what we got here. So we got a lot to go over. I closed out a bunch of trades today. We actually did very, very well. I got all of those plays, the plays for tomorrow, and everything else I told you. So I've already took a long time. Just hopefully we see you on stream, youtube.com/the stock market. And you know, despite Google's ad revenue, all of that, just it's all free, baby, and we do it for y'all. And thank you to you. Do not thank me. I do not want a single dollar. All we want is to get some good information out to people so that they can be in the game, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, do you feel like a blessing? I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Fingers to the down.
All right, off the bat, ladies and gentlemen, today was actually really, really simple. I'm going to give you the simple breakdown right now. The bonds bounced and the dollar dropped. That right there is bullish considering everything that we have seen. Again, that is the easy answer, but what I'm trying to tell you is that many things came together to cause this reaction, whether it was Japan, Europe, the earnings, again, a variety of different reasons, but that is the easy answer. And now, like I was telling you, there was good earnings in the morning. The narrative up until Google reported in Microsoft, I'm telling you, I watch it change in front of my eyes. I could even share. Let me see if I could get it. All right, I got it. And then futures are gapping down now 0.85. So we're going to already see you're getting a little bit of the negative reaction. But again, just don't underestimate Wall Street. And there's still a lot of the earnings and wait for the upgrades, downgrades, and all of that. But literally, this is the quote that I was saying. Again, before they updated, Sean Cruz, head of trading at TD, and this echoed a lot of what people were saying. up until this earnings change, and they're saying, hey, the earnings so far have been great. Even though it's been mixed, it's been better ahead of expectations. It hasn't been that bad. So now that's why we're watching this week so closely, because we're finally starting to see some bad ones. And now we're finally going to get to see the reaction after the rally with Google and Microsoft. But like I'm saying, you saw good macro factors. That helped out a lot. Market was responding to the rest of the earnings. Now you're getting a response to the rest of them. But besides that, it was very, very simple. So that is key number one. Key number two, baby. I've already told you, Google was very, very bad after the market. And now this is why I'm saying we got to be cautious. Even a 1% gap down, don't forget, we've already moved like 10% just over the last couple of days. So the market may try to look at this as rosy, and just don't forget, in the morning, there's going to be more earnings, and that could slow things down, or at the very least, some of the sympathies might sell off. But a lot of people, they're not going to sell off too soon, knowing there is Apple, Meta, and a bunch of others. Now, people might get worried, and that's what we want to see, but just watch out for the upgrades, the downgrades, and all of that. But what I'm trying to tell you is you have evidence of what's going on. Last time when Snapchat, before it even happened, when they just had a sign of slowing ad revenue. Again, that's when I made the video with the same setting. Everybody, literally the whole market sold off 2.5%, 3%, the whole entire NASDAQ, S&P, because people were worried about that fear. Whether people are worried about it or not now, the point is the evidence of that showing up in the bigger names and the ones kind of more tied to the economy, that is not good, and that is actually evidence. So we got to see how the market takes in, how people ride with all of that. But that is key number two. And then number three, man, everything we're getting on right now, even though we have plays, I opened a couple, but really I'm just riding about the puts so I could get a better close on them. Or if it comes back down, remember, we've been taking calls, but either way, I think this reaction may be short-lived. We have too many events coming up there. So regardless, tomorrow morning will have an effect. But what I want you to notice, use today after a guide. This is why I've been telling people, don't get frustrated, get patient, because that's what you saw last 2 days. Earnings good, goes up, earnings good, nothing bad. And now finally, one bad earnings, we're going to see it have an effect. But again, just don't get too jumpy. As people are getting jumpy with positioning, that is what's made the most mistakes, if anything. But that is key number three. And finally, I hope you get this. Nothing matters, bro. Literally, none of this matters. Nothing matters right now because Powell is on Tuesday. So what I'm telling you about today, tomorrow, how to set up, again, don't get frustrated. Reactions may be short-lived, whatever it may be. Nothing matters because Powell is speaking next Wednesday. That's it. Another Fed meeting. We've seen rallies. We've seen the market try to bounce again. Same thing happened in May. You got to go off of it in June, July. There wasn't a Fed meeting, and this is what we're waiting for right now. But Powell is speaking on Tuesday. If you really want to understand, we want to look at the earnings for clues on the economy. But then beyond that, how the market's going to move, it's really a question. Do we break into and past the 390s, or do we come back to 365, 370-ish, and then kind of get set up or make the final move on Powell? But that's all it's going to be. So regardless, we're finally getting our bad earnings news. Anything could happen. It could drive us a lot higher, a lot lower. But what I'm telling you, we're about to be in the middle of the week. We're about to get through all these events, and Powell is going to be right there. So keep that in mind as you're making your plays or trying to set up. But that is everything. It's going to be wild tomorrow. Watch out for all of it. Again, we're going to be on stream. So I hope you're ready, but let us get into the plays. So, right off the bat, we made a bunch of different plays. So, before I think I had like 19 orders today. Closed out a lot. We had some good moves, but let's start with the first three plays. And all of these, I really like. So, the first one, starting with it, Apple, baby. I went short on them. And really, why I like this, again, I made this play before, after hours, in any of the news. So, that's the good part. And what I want you to see, there's a good risk to reward. It's a simple question. Do you think by Thursday Apple will go above 160? If you don't, then the risk to reward is amazing. It's already had this little pre-earnings run up. People are getting ready for it again. I had all of the other plays, and I really said, well, at this point, I got a lot of pre-earnings run up. If anything went bad with any of those earnings, I'd want the exposure. But with 50 shares short, I was like, as long as it doesn't go above 160, it won't squeeze me more than 350 unrealized. So I think the risk to reward reward is good. If anything happens with earnings, anything starts to fade after this rally, it'll be easier to make $5, $10 a share than it would be to lose that. So I'm really liking it. That is play number one. Again, I went short 50 shares at 150, 154. So a little up after hours, but it was a price it was pretty much at throughout all the day. So really like that. That is play number one. Then play number two, baby. Amazon to the downside. And I made an option trade today. I know. Oh my gosh. Oh my gosh, trades options. I know. It's so wild. Oh my gosh, this is so But honestly, I really like this trade. We explained the logic a lot. I've been telling you, I don't want to play earnings with shares. Again, even this morning, I sold out of my Google. We've been out of the meta. Again, I've been playing the run up with shares, but I haven't been holding through earnings. That's something I don't want to do and take the dollar for dollar risk. We talked about using the options, and that's why I was looking through the chains. Amazon, the weekly put. So I did take a risk. I'll even tell you the play. I grabbed an October 28th this week, 110 put for $1.06. So that has a break even at like 109 and some change. And I was saying this, that break even by the end of the week is 10% lower. So if it hits, it's going to be great. Don't get mad at me. If you're like, Josh, you didn't tell me the play on stream. I was speaking in break evens because that's all that I care about with these plays. Again, I do not trust the market maker right now, or at the very least, I just respect them. I respect their hustle. I respect their game. And that's why I want to be very, very cautious. But I was looking at the break evens and I was like, well, this Amazon option, it was at the lowest point of the last week. Earnings is this week. It says 10% to break even, and that's not accounting here for both earnings and the sympathies. I thought it was a decent deal, but like I said, 10% to break even by the end of the week, that's still kind of expensive. So it was good and bad, but considering everything, I like the risk reward. I went with one contract, and then like I said, I'm probably going to flip out of this one in the morning. I don't think I could hold these as long as I've held some other option plays in the past. So that's the nature of the market, but we will see. But I really like this play, and what I want you to see, the strategy behind it is very, very easy. And I think that if these open up too high tomorrow, you could apply this to other names, and all it is sympathy. I was saying it all day. I said Microsoft is going to report. I don't have a play on Microsoft, but I went with this Amazon play to the downside because I said, hey, if Microsoft's cloud is bad, that will hurt Amazon cloud. And the sympathy, and I said the options are cheap. Nobody's priced in a negative move on any of these earnings yet. So I said, let's go for it. But that's all you got to look for and play the sympathies. You know, a lot of people ask me, they're like, where do you get news fast? Where do you do this? Where is this? Like, none of that stuff really matters. Like, for real, right here, right now, one of the biggest things you can learn is what companies are related to each other. The blessings come in twos, baby, because it's like one company will always affect the other. So come on stream, I will let you know, but we went over every single one on stream today. I went over the Amazon trade. I said Microsoft, Amazon, Texas Instruments, STX, Google, Facebook, Snapchat. These are easy, but again, if you want to keep moving through earnings, this is really good stuff to look at because you could kind of position ahead and start to see some stuff. But this is the logic we went with. Gonna try to apply it tomorrow, but holding that Amazon, that is play number two. And then finally, play number three. I really like this one. Boeing, baby. And we haven't played it in a little bit. I think last time we had a good flip, but they got earnings in the morning. And the fun part about it is that Boeing's conference call happens in the middle of the day. Trust me, we've seen this many times before, and I'm saying, if you keep your eyes peeled, I think you're gonna get rewarded. There's usually a move in the beginning, pre-market, then it does its early move, but then like I'm saying, that conference call hits in the middle of the day, they provide some info, and it either sends it flying up or just dying, and that's the opportunity I'm going to be looking for. So telling you this now, I think it'd be wise to keep Boeing and like a Boeing news scanner on deck for throughout the day, but they have earnings regardless, and again, this is going to have a pretty big effect there on the Dow and everything else, so watch out for them. But that is play number three. I don't know, that's it. Those are the main plays. So let's get into the trades of the day. Like I said, I started with a lot, and I opened up with Coca-Cola. I did 100 shares at 58.64. They had really good earnings. Again, this is one of the companies, a lot of companies guided up today, and Coca-Cola was one of them. So it was good. I said value play. It will hold. I liked it a lot. I might even want to double dip. I did flip it by the end of the day for like literally 20 cents. I made $20 because I went down on it before it went up, and I said, all right, I was expecting the post-earnings move a little quicker. It materialized, but like 5 hours later. So I said, all right, let's reassess and see everything else. But that was the first play. Then NVIDIA, I sold out of my shares. I've been riding since about last week, 127. I bought these around 118. So I got $10 a share, $500 net profit. I was like, maybe it's time again. We've been riding the upside and taking a little. You'll see when we get to the holdings, but there was that one. Then the ES, I did a flip there for like 2 points. I think it was like $100 or a little less. Then I closed out the Google before the earnings at 103.16. That one was like $250, $270 profit. But again, got the pre-earnings run up, sold out, made another flip on the ES, did a short, got another 2 points, and I did another one, and I think I lost on that one, lost 2 points. I think by the end of that, I was back down to like $180 or $200 net profit. And then I had the ZN. I made this last week. I was down on it. It came back up and had $176 profit. This one's related to bonds. I really wanted to hold it, but I said, again, let's use this opportunity to kind of reassess, especially if we could get some profits on it. And then after that wonky move, but took $175 profit on that. My Adobe shares, I sold out for $323. I booked a $30 net loss. And this play, I was down like $1,200 on it, if you remember the day after. And that's when we did a lot of shares. So the fact that that was eating to the P&L and then it came back up, I like it. $30 loss. We're done with that. Get our money back. Not too bad. But again, could have been worse with options or decay. I'm very, very grateful to get out of that one. So closed out of the Adobe. Then I shorted the Apple there. Those are the 50 shares. Then I did another upside flip. Got like 3 points. Made a couple $100. And then you'll even see I did an ES after hours once the news came. Did another flip. I pretty much on all of those ESs, I think 4 of them hit. The one of them I took like a $50 or $80 loss, but the net profit throughout the whole day was $600 on the ES futures. Then you see I closed the Coca-Cola for $20. Then I sold out my Disney after hours for another $200 profit. And then I opened up 2 more MES that I'm holding now and that we're going to ride into, and then we'll get into all of those. But that was everything. Took a ton of profits literally on the shares alone. I got to realize over $1,000 on that, another $600 on the ES, and now let's get to the holdings. There's some good and some bad. So as you see, the pound is still holding. That one's down and he clobbered me again today. I keep saying I want to close it. And I just, like I said, I'm playing the game with chicken and it ran me up here yesterday. So still going to hold this one out, but we got to do something with it. Again, my base case is like, Josh, why are you playing chicken? Why are you holding it then? If you keep saying this, why are you doing that? It's because the UK economy is weak. That's it. It's very simple. They have a lot of risk going on. And it's not as if, you know, the pound going down could get fueled by other things. So even though we're getting squeezed on the events and there's all this volatility and now the bad event is kind of passing away here, I'm thinking I could get a better opportunity. So we're going to see. I got a little bit of time, but still riding out that one. The ES, I'm holding up $400. That's the option trade. I was up 1,000, then a gap down here again. That kind of killed it. But remember, that was our midterm rally. We've been talking about this. Literally, that play was made before October. So we were riding it out. It did good. I think at the top, it was like 1,200 or 1,300 on the day today. And then it came back down again. The ES open or the futures opening. Then the MES, that's the one I took there at the bell, 185. Riding that one into tomorrow, my 830. That's the bad NQ, but I mean, hopefully we could balance that out if it comes back, but I just still don't like him. That trade pissed me off in a weird way. The MYM, the one that I'm down big on, that one, not as bad. And this is what I was saying. I was flipping the big ES. I didn't want to get trapped in on anything. And now hopefully you guys can see what's going on. I'm taking all of these profits again the last couple days, the week before that. And you're seeing, yes, the profit has ran against me on like MYM, even the pound. But even if you go track the watch list, I think right now the difference between all of these should be about an additional $2,000 or $3,000. And the idea is for realizing more on the way, we're still holding these. And then if it starts to come back down, that's what I'm hoping for. That's why I went with the MES and I flipped out of the ES really quickly because I'm looking at it, I'm like, hey, I got my exposure to the downside. It's making back some of this money here because we've already taken profits on the upside. So it's fine in the balance, but hopefully you're seeing it now. Again, I've been closing all these plays. Any play that's not up here now, it's either if we've taken the loss, we've told you, again, like that micro ES at the beginning of the week or even the Adobe there. But now if I did close out of it, I've usually walked away with profits here. So now you're seeing how it's playing. There's the Apple short that's remaining downside, and then ACAM, that's our original upside play. They're up $1,200. And now, here's the crazy part. They got another rumor thing about the buyout from the Boston Globe. They talked about it, but even tying it into all this, remember when the MNQ or the MYM was even, I think I was down like $4,000, I was negative on ACAM. So we're watching some of this work out, but I'm waiting for the market to kind of crack up or down, but that's how we're managing it, taking profits along the way and riding it out. And then everything else, UNG and all of that, those came up today, but still overall down. But hopefully we get to wake it up a little bit. But those are your main plays. As far as everything else, all about the earnings plays. Again, every play I mentioned on those keys today, I'm going for them, baby, and we're gonna be watching them. So I think it'll be simple. Watch the overall industries, get ready for the morning, and just again, be careful. Even if this is short-lived, there's bad evidence today, but again, people are jumpy, so we'll see what happens. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, respect is going to save you. Respect the market. Respect all of it. I'm just telling you, you don't know if you'll get clapped. You don't know if you're going to get rewarded. If you approach it with respect, you will be taken care of. Ladies and gentlemen, that is all you need. And if I could remind you, you have time to think, ladies, and I'm telling you, you could think about alternatives. You could run through. You have time to calculate the break-evens. You could go do all of this now because there is no FOMO. You're not missing out on anything. Look at the wall, up and down, stay the same place. You have time, so make the most of it because you have time and you were built for this. You know what that means? Oh, that's a beautiful combo. So stop playing with me, Chad. I need you hydrated. I need you healthy. I need you in the game. And God bless all my positive people. Let's go. Spread the truth. Spread the love. And I'll see you there in the morning. And I hope you're enjoying your earnings season as much as I am, baby. That's it. It's game beast mode. I want to hit some free throws right now. You like I did this with my hood on. Do I look weird with my hood on? I'm like comfy. I don't know. It's like been cold. It's been chilly. There's like earthquakes and it's chilly. And then I don't know. And then Powell, I don't know. It's so cold outside. I don't know. My puts. I don't know what I'm gonna go. This one's okay. I'm gonna leave.